Does a pre-approval letter mean that you're approved? Is it an actual valid approval? That's the answer you're going to get in today's video. If you're new to the channel, thank you and welcome. Please be sure to subscribe, hit the like button if you're enjoying the content, and don't forget to hit the bell to be notified every time I drop a new video, which is every week. I want to start first with what is a pre-approval versus a prequal. I think the industry has really gotten away from prequals. The question still comes up, so I want to answer it. But I'm really happy that it seems like the industry's kind of done away with that. A prequal is basically when you call a loan officer like me and you say, hey, I've got a 700 credit score, I make $4 grand a month, and my bills are $600 a month comprised of these 4 things. What can I approve for? And the loan officer says, well, according to that information, then you can probably approve for this particular amount. The problem with that is people are human and we make errors and we forget things. So many times people forget, oh yeah, I've got 80 grand of student loans I didn't mention because I'm not in repayment yet. See, so that in itself could really just kill that prequal. So the prequal is really a waste of time. Don't do that. A home purchase is too big of an investment for you to make a risk or take a risk. Just get a full-blown pre-approval. So what does a pre-approval mean? Well, let me sidestep for a second. If you have not subscribed to the channel or hit the bell to be notified, please do, as I drop videos on anything and everything mortgage education. My name is Stephanie and I've been a loan officer for 18 years. Give me a call, shoot me a text, or send me an email because I want to be your loan officer if you're in Louisiana, Mississippi, Alabama, or Florida. If you're in other states, I won't be able to help, but I'm here still to educate as much as possible. Now back to the topic at hand. Is the pre-approval worth the paper it's written on? Does it mean that you have approval? Let's talk about an overview first. Okay, we talked about a prequal. The next thing is a pre-approval, which is generally where the loan officer pulls your credit, takes your full loan application, hopefully asks you a million questions about how you're paid because your answers can change everything. So they should be asking, are you paid hourly, salary, base, bonus, commission, combination, 1099, W-2, K-1, what percentage do you own? That's a lot of like terms and mumbo jumbo at you real quick, but they should be asking those kind of questions when it comes down to what you listed for your income. So the loan officer is going to take the application, pull the credit report, review the application with you, should be done as well. And then some lenders stop there. And so they've now got the credit report so they know your debt and you can't forget any like you may have been able to forget when you were doing the prequal. They've got your debt, they've got your credit score, they've hopefully validated your income through a lot of questions, and then they'll issue the pre-approval there. Okay, well there's another way that some people do it, and the way that I generally do it. Case by case, but this is how I generally will do it, is I'll then take it the next step further to be safe, and I'll go ahead and get your documents. I'll go ahead and get W-2s, 1099s, K-1s, whatever applies to you, paycheck stubs, bank statements, all those different things, photo ID, and go ahead and get those things and analyze those things because let's say that you told me you had $10,000, okay? And so we put that in there. We were working up the pre-approval on the $10,000. Well, then I get the bank statement and find out the $10,000 just got deposited in cash, and you can't prove to me with a clear, concise paper trail to follow the government monitoring as to how you got that money. Well, that can change the approval. And there's different curveballs like that that can come up. So the way that I like to do a pre-approval is to go ahead and get the application have the one-on-one conversation or consultation to review the application. Go ahead and request the documents, especially if you're self-employed, and go ahead and calculate the income and review the assets to then issue a pre-approval. Obviously, that's a lot stronger than the prequal, and it's a lot stronger than the other version of the pre-approval. Now, there's another version of a pre-approval that some lenders do, not all of them do, and then I'll do case by case. Now, with 18 years experience, what I've always prided myself on was when I got into this business, I said, let me sit with the processor, let me sit with the underwriter. They're the people that come after me, the loan officer behind me, shall I say. So I need to know what they're looking for, what they're doing, and how I can best help them to best help my customer. And so I'm able to pre-underwrite things and know what the underwriter is going to look for, which they're going to look at, and then I can always ask if I'm not really clear. So the next part of that pre-approval or version that some people do is they'll actually go ahead and do what's called a TBD or to be determined underwrite. So we'll go ahead and gather the documents, income, assets, credit report, application, and submit it to an underwriter to issue a credit approval. And then that way, ideally, it'll just be subject to appraisal, title, insurance, things that have to do with the property itself, and maybe not necessarily you. Now, I do want to give you an example of how important these underwrites are and these pre-approvals are, and that you are truly, truly clear and concise with your loan officer. I'm going to do a quick little plug because I built a first-time homebuyers massive mortgage education course that I usually charge $597 for, and I'm going to drop a link below for all of you to purchase it at $97. Words can't express. It's almost like growing a baby and having a baby. This course has been so much fun, and so much passion and so much dedication has gone into this to not only help you get a great loan approval, a great pre-approval, but also help you with a smooth and on-time closing. So enough of that. We could get a TBD underwrite, and let's say that it's a shaky file. It's not real strong on a lot of fronts, okay? So it's a little bit of a shaky file, and the underwriter comes back and says, yes, I can issue this approval, and I want proof that they paid their rent on time for the last 12 months with a check. Now, you don't always need this, and a lot of times you don't. I'm talking about a shaky file right now. I want to make sure that I'm giving you good ranges of examples of what to expect. So we've got a little shaky file. They say, the underwriter says, I want 12 months canceled checks to prove they paid their rent on time. Well, let's say you paid by cash and it's not trailable, and you paid it to an individual, not a big traceable, trackable corporation that can verify information for us. Well, then you don't have that pre-approval, even though it's the pre-approval with the TBD underwrite, because you can't meet what's called the conditions that are the requirement of the full loan approval. Let's talk about the full loan approval, because that's the question that you searched was, is a pre-approval an approval? Is it basically worth the paper that it's written on, right? So what is a full-blown loan approval? Full-blown underwriting final approval means that every single item has been provided and has been approved and has been cleared. You see, you might want to check out my other video on the 4 C's of mortgage, but part of that, to not go too much into depth with that, is that there's collateral and there's credit and there's capacity, or some examples, right? And so not only are you getting approved, but the property you're buying is also getting approved. And all of that information needs to be verified to make sure that they're good. Now, most people aren't buying a condo, but if you're buying a condo, then you've got the property, and then you've also got the condo or the association, which is a whole another set to go with the approval. So coming around full circle, the answer is it depends. And I laugh every time I say this because there are so many times where the answer in lending is it depends, because it does. Whether you're doing a prequal does not mean you're getting loan approval. If you're doing a pre-approval but you haven't provided documents, I'd still be worried that that pre-approval does not mean you're getting loan approval. If you're doing a pre-approval where the loan officer is going through, like I said, income, assets, credit, application, and getting your documents, I would feel confident with that if you're with a seasoned, experienced loan officer. And then I would also feel confident if you had gone through a TBD Underwrite and the conditional approval came back and the loan officer talked to you and you felt like you all could meet those conditions. Then I believe that that would be, yes, you have much more chance of an approval. However, don't forget that property also comes into play. So if it doesn't appraise, or the condition's not okay, or if it's a condo and there's problems with the association, even though you're good to go, that pre-approval letter might not mean that you absolutely have that approval in the end. Thanks for tuning in today, and I will see you in the next one. Whether you're moving in 9 days or 90 days, if you're in Louisiana, Mississippi, Alabama, or Florida to purchase your new home, I would love to help you. My team would be delighted and appreciative of the opportunity to serve you through this exciting time. Give us a call, shoot us a text, or send us an email.